All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Welcome back to Wealth Management in Motion. My name is Miles Durko with RBC Wealth Management right here in Winnipeg, Manitoba. Today, I want to talk about the consistency of the equity investment market. Just how consistent are the returns from the stock market? Well, we've got data and we're going to dig into it with you today. So we've dug through the data. We went back about 150 years to find the numbers for you. And what we've discovered is that in any given year, out of the last century and a half, stocks outperformed bonds by 61% of the time, and stocks beat treasury bills 67% of the time. Over a more meaningful 20-year period, stocks beat bonds 95% of the time, and they beat treasury bills 99% of the time. Now, you've probably heard me say it in a previous video. We're really looking at what's probably going to be a 3-decade retirement period. So over that very meaningful 30-year period, stocks have a history of beating bonds 100% of the time, and stocks beat treasury bills 100% of the time as well. So over meaningful periods, stocks are the workhorse of a portfolio. And when you have a growth generator like equities in your portfolio, and you have a plan that walks you through what the rest of your financial life is going to look like, that creates a portfolio that pays you consistently. So if we want to talk about how to make your portfolio pay, I think it is really important that we talk about maintaining an equity strategy within your portfolio. And when I say equity strategy, I don't use those words lightly. I don't mean just take a handful of stocks and throw them in your portfolio and that'll work out fine, because that may not work out fine. But having a disciplined, research-backed strategy, like the strategy that I follow for my clients, has proven to work very well year after year, decade after decade. And I'd be happy to talk about that with you anytime you like. One thing that, in my opinion, that I think is very important for a lot of people's portfolios who are nearing retirement or already living retirement is to ensure that the equities that they have in their portfolio are dividend paying. When we look at the investment markets day to day, week to week, month to month, even year to year sometimes, we can't count on growth in all of these periods. Sometimes we go through a period of decline. Sometimes we go through a period of stagnation where the markets really aren't growing very much. But if we are populating our portfolios with dividend-paying investments, then even during these sluggish or stagnant times, we can count on cash flow continuing to flow into our accounts to help fund our retirement lives. And how do we find out which equities make the most sense to put in our portfolio, or even what ratio of stocks to bonds or cash instruments that we have in our portfolio that's going to fund our retirement life and potentially leave a beautiful financial legacy to those that we love? Well, through a professionally written financial plan or a retirement income plan. That is something that I help my clients with regularly and all the time, and it's something that we can discuss for you as well. I'm Miles Durko, right here with you in the heart of it all at Portage in Maine. Please like and subscribe to the video and watch the next video that's coming right up.